Hello and welcome to The Trade on this Friday. Well, before we get into the charts, let's take a look at what traders are watching. Plenty of news out there, of course, with mega cap US tech companies, including Apple and retail giants Walmart and Nike, leading a global market meltdown as President Trump's sweeping new tariffs heightened fears of a spike in costs across a wide range of industries across the globe. Shares of US banks tumbled to multi-month lows after President Trump's tariff plan was announced, sparking fears of a global recession and a slowdown in consumer spending that could hurt earnings. And 8 OPEC Plus countries unexpectedly agreed to advance their plans to phase out oil output cuts by increasing output by 411,000 barrels a day in May, a decision that prompted oil prices to extend earlier sharp losses. And the US dollar has sunk against major peers, dropping to 6-month lows against the euro and the safe haven yen and Swiss franc as investors grapple with how President Trump's tariffs will impact global trade and economic growth. So how's this all playing out on the charts at the moment? Well, I caught up a little earlier with Richard Wiseman from Wiseman Consulting for his analysis, starting with the Nasdaq.
Nasdaq, what we're looking at is a broken support area, that broken trend line. That's when things really started to take off after we broke that trend line. And you can see there is some support. It's kind of a wonky area. It comes in, the top of that area is around 17,350, and the nice round number is 17,000. So I'm not saying that's the bottom, but I am saying that is an area of interest. I'd like to see, first of all, can we reach it? And second of all, how does the market react if we do reach it? I think a lot of long-term value players will be interested if they can get those levels. Of course, everything is, day by day with this tariff news. But path of least resistance still down. And that's the area that I'd be interested to see if it can hold and try and turn it around.
Okay, but that key 17,000 level then, that is potentially at risk.
Yeah, I'm interested to see how we react there. It's a logical area for long-term technicians to dip their toes and see if they can buy weakness and get some support. But no, the path of least resistance is down. It's been down with conviction since we broke that uptrend line.
All right, so that's what we're seeing equity-wise. Let's take a look at how this is playing out for fixed income, particularly take a look at the longer 10-year then and what trends we're seeing. And in fact, in the session just gone, we did see some precipitous falls.
Yeah, so obviously futures, it's inverted. So when the price of futures is going up, that means the yields are coming back down. You saw a nice flight to safety over the past 2 sessions, especially this session. And sure, the shorter term trend over the past month, 2 months has been up. And it sure seems like a bull market if you only look at it since 2025, which is why I wanted to kind of zoom out a little bit and look at the weekly chart and see long term, what are the areas of interest? And what you can see is around the turn of the year, 2025, 2024, we hit this support area at around 107.16. And then there's some resistance from, I would say it's probably around September of 2024. And that area comes in at 115. So sure, short term, the momentum is for the price to rise and the yields to fall, rates to fall. But I'm interested to see if we could get above that 115, and this is not going to happen tomorrow, but longer term, over the next few months, this thing could really move lower in yields and up in price much more dramatically. And then we really know we might be on our way to a full-blown global recession.
Goodness. Yes, well, certainly that's what the market is wary of at the moment. But so, what do you think? Still range bound potentially at the moment, but there is that risk.
Yeah, and that's the interesting thing. Or maybe it's a mild recession if we hit 115 and then come right back down, go back into the range. But if we break 115, maybe it's a severe recession, much worse than people are thinking at this point.
Now, Richard, of course, the notion of US exceptionalism now has pretty much evaporated, given what we've seen more recently. Then how's this playing out as far as the US dollar is concerned?
Yeah, so this kind of goes along with the other two charts. I think that the euro is in a well-defined uptrend. You can see from around December through February, even late part of February, we were making this bottoming area, and then we took off, really took off with the first hints of this tariff issue. And we have made even more progress. It seemed like things were going to stabilize, and the news related to that was, oh, the tariffs won't be that bad. They'll be 10%, no big deal. Let's stabilize this resistance area. That, what is it, 109, 50 area that is going to hold. And we broke that. And because we broke it, our next target is probably around the 112 area. And it looks like this is a strong bull market as opposed to moderate.
So, Richard, overall, I would imagine, given what we're seeing, certainly at a macro level at the moment, you will be on your toes, given what you're seeing on the charts at the moment.
Yeah, they've been keeping me busy. The markets are very volatile. We expect this level of volatility to be sustained over the short run. We have dampened down our exposures. We're still trading all 36 markets that we're interested in, but the sizes have come down. And that is just good risk management. There's a cliche on Wall Street: when markets get volatile, all correlations go to 1. So everything is risk on, risk off. And that, I think, is what we're seeing, especially this week.
Richard Weissman from Wiseman Consulting, and that is the trade for this Friday.